What is up, goons? We are back for another episode of Jack of All Trades, and we're going to try something a little bit different going forward. We're going to do like these shorter, bite-sized episodes that are easily digestible, and it's probably going to be easier for us to keep on track, topic-wise, right? Because we do go on tangents.
Yeah. So we're gonna try and it's 10:59 right now, so we'll cut ourselves at 11:30.
Yeah, so we're
Keep,
thinking,
keep things sharp.
short and sweet. Keep it nice and simple.
Yeah.
So this episode we're going to do some trading, or we're going to talk about some trading, right?
Yes. Yes. So I want to talk about CEI because that was the hot stock of the week or the past couple weeks. So Sam, if you want to pull up my screen and kind of run through that here. So first thing I'm going to do is go to the daily chart here. So this is like the past like week, a bunch of oil companies and stuff are running. So this kind of this is obviously kind of grouped into that chunk of stocks there. CEI, like it's kind of it's got a big history in like small caps for just like just shorting big run ups and stuff like that. So the first thing you want to do is when you're looking at something like this, you see it. I'm just gonna move this. I have too many screens going on here. So CEI. So the first thing that it kind of started to pop onto people's radar, like when it was maybe around here, like at the $1.50 area, because it had come down to 50 or 30 some odd cents and then started to run up. So it catches everyone's attention once it's up like a few 100%. We got lots of volume coming in. I think the reason that we kind of had this run up, I think if you look at the kicker on this one, it's a bit more of a time frame here. So this is the daily chart we're looking at here, guys. So if you look at, first thing we always do when we see these charts is we draw our lines, right? So first thing that I would do is, you draw your line there. So that's at the bottom. We came down last time, we had this base, we had all these kind of spikes, this big run up into, February of this year. And then it came back down, kind of bottomed on this line again. I think, even back here in, 2019, we hit like almost dead on to this same, 45, 46 cent area. So I think the kicker for this run up was this right here. And it's kind of like, David, it's almost kind of like that Bitcoin, that double fulcrum that you played earlier, like, because you get almost kind of like this big top, you can argue it's a bit of a head and shoulders, and then it dips below that level, right? And then once it reclaims, you can see that really nice rebound here, right? So you get that reclaim, like it drops below this line that it's been holding for basically 3 years at 46 cents, comes down to 33 cents. And then once it pops back over, it bounces right off it almost to the penny, and then you get that big rocket all the way up, right? So I think that was kind of the kicker for this move. But obviously, everyone's looking at this and they're thinking, okay, should I long this thing? Should I short this thing? So for me personally, like obviously I'm kind of short biased to begin with, but realistically, like the first thing that you want to do always is look at the history of the chart. Like what's this thing like how does it trade, right? So if we just zoom way out here, you can tell that this thing, since basically 2019, as far as its history goes, every time it runs up, it just sells right back down. It runs way up, sells right back down. So it does, it's done this 1, 2, 3, 4, 5, 6, 7 times over the past 3 years. It's had these massive, like 500, 1,000% run ups, and then it just goes straight back down to zero. So for me, as soon as I see that, I'm thinking, okay, great. Like, when do we want to short this thing, right? Because it's coming back down unless something significant changes. Like this company is basically just a piece of garbage, for lack of a better term. I think if you go like way back too, like I'm pretty sure it shows on TradingView the stock price was like $80 million at one point, just because they've done so many splits to try and keep from getting delisted.
Is that what it is? Because I don't have the same chart as you. I've been looking at it, and it's like, it was at 12 million at some point when they IPO'd.
Yeah. Like so, this is back to 2015, and like same thing, right? Like it's still these huge spikes and sell-offs. So up here it says $7,000 share price. I don't know if you guys can see that. So I don't know how long this company's been around. Like let's go to let's go to
2011.
Okay, let's go to 2011. Yeah, so 2011 share price at the top there is 80,000. Like, it's just like you look at this and it's just like that pretty much tells the story, right? So for me, this thing, it's not a long-term buy by any means, right? So that's why I start to look at things short. And like I've always said, I've had a couple people ask me over the past few weeks, like, why do I like shorting versus going long? It's just like it's kind of just like a personal thing. Like if I'm doing a trade, I just find it a lot easier to find how far the thing's going to come back down, right? Because if something, like ideally, if you're doing a really good long trade, it's broken out to like new highs, right? So if it breaks out to new highs, David, I know you're good at that kind of stuff. Like you use your Fibonacci lines. Like I'm not really that great at that kind of stuff. So when I see it, I might get into the trade, but I'm like, okay, how far is it going to go? Like, is it going to go up $1? Is it going to go up $3? Like when should I start selling? I don't really know because I don't have any levels to work off of, right? But if you're shorting, I mean, if I look at a chart like this where it's super beat down, let's say we're down here, right? This thing comes up and it gets up here and then it kind of turns around. I'm like, okay, well, the next support is here. So at it's $7,200. So it's going to sell down to there, and then if it breaks that, it's going to go back down to the next. Like it just gives me like clear targets to hit, like to shoot for when I'm doing my covers. So that's why I've always kind of preferred shorting over going long for trades. But anyways, so we'll zoom back into here. So one of the big differences, like right off the bat, I hope you guys kind of pick up on is the volume, right? So if you look down here compared to any of these other spikes, like the volume was so big this past run that these other ones are almost like not even visible, right? Like I think the biggest day it looks like back in 2020 was like 125 million shares. And we had a day last week where we traded 980, almost a billion shares of this stock was traded in a single day. So the volume was just massive. And I don't know what the reason for that is, but I'm kind of inclined to think that this is just a pretty good indication of, like the Discord chat rooms and the Reddit groups and, the stimulus checks and all the people that are day trading now after being shut down. Like this is because this has never happened before and the company fundamentally hasn't really changed at all. So to draw that much attention is kind of shocking. But regardless, I think one of the key things is just that when you have this much volume, you have to be really careful because anytime that you have this kind of volume on a stock, patterns become a little bit trickier. In this case, they become a lot trickier just because of the volume. So usually what happens is, let's say you have a pretty standard pattern like an ABCD pennant or, whatever kind of thing you play, kind of when to buy and sell, your targets. When you have something like this, it can get invalidated just because of how many people are in the stock. So you have people that are uneducated, they don't know how to trade. So when this thing breaks down under a key level, they're all in their group saying, "Oh, this is great! It's going on sale. It's a good buy." And then everybody starts buying into it at what really is the worst possible time. But if there's enough people, which as we can see here, you can still get those shoves up. So in this case, the first thing that you want to do is always like check your daily levels, right? So we look back at any of the big volume days, I just, you want to draw your lines in on any of those key daily levels. So, we had a big volume day here. I'm looking at this one back here. I don't know if you guys can really see that on the screen, but there's a big volume spike there. This green day here has a big volume peak. So I'm just putting in the tops of those wicks. Next one would be over here. This red one here kind of sticks out. And then after that, you put in your highest one, right, which is kind of up there. These two. So just to kind of give you like a rough framework to work on, right? Like those are the kind of first levels that you want to look at. So then we zoom in here. One of the things you gotta remember about this kind of stuff too is this stock in the past, it's always done kind of these big parabolic moves, right? So you don't want to be early if you're trying to short something like this. You want to wait for like the big blow off top, as they call it. Like you want to wait for this thing to rip way up on huge volume, like exhaust itself, and then just like bag everybody who's chasing it, because then you're pretty safe to get in short side. So anytime, like if I zoom back in, if we zoom back in over here, like if you look at these days, right? Like we were at $1.38. We had these two huge run ups, big volume relative to the history in this time frame, and then we had a massive gap down, and then it just bleeds off into nothing, right? Same thing back here. We had this spike, we had this big spike, and then we had this huge run up where it opened at $1.84, ran up to almost $3, and then closed at $1.78, right? So that's kind of like the death blow on the stock, essentially. So when we look at the run that just happened, this was the biggest one that we've had in about 3 years. So this one was kind of tricky though, because like this day here, I'll zoom into these in a second, but this was, where are we here? 29:30. Yeah, so this was Friday, Thursday, Wednesday. So Tuesday. So we had kind of this run up here, which is this is sort of where it got everyone's attention, right? Like it's kind of sitting, it's consolidating around, it's up what, I don't know, 400% or something like that from the lows. It's kind of consolidating and it starts to go off here. So this is kind of like when everyone's starting to really look at this on the short side because they're thinking, okay, this thing's, it's getting up like 500-600% from the lows. Like, let's start looking for an entry, right? So, but remember, like you need that big blow off move, right, to kill the stock. So, if we zoom in here, we'll go back to that day. So let's go back. Yeah, so this day here. So this was the day that kind of trapped everyone, right? Because what happened is we had this morning move. So it ran up pretty high in the morning, and then if you look at this here, so again, we always want to watch the volume on these things, right? So like we had this morning move, and this 294, this is one of our daily lines that we drew in just 2 minutes ago, and just as a coincidence, look at that, it kind of consolidates around in the morning. When it crashes, bounce right off that line, flush straight under, and this is a line from like a year ago, right? So it kind of holds weight all the way through, and then check that out later in the day, right? Bounces off that line, drops below, like hits it almost to the penny 3 times, breaks through. It's really that simple, guys, when you're looking at these lines. So I think what kind of happened here, the trap that we had was, we opened down here, we had this big run up again, everybody's excited about it. We had a couple big green volume candles, and then up here we had this like the highest volume candle of the day, 10 million shares traded in 1 minute. And we had this big double top and it just kind of tanked down, and then it just sold right off. We broke back down, and then right here at 288, that's your red green line. So this is the first day that we've actually gone red on the day, and that's usually a big indicator of, okay, we're going down, like this thing's dead basically. But one thing to keep in mind with that sort of stuff is how high it is extended above it to begin with. So if you're looking, we were up at 344, and then we break that line at 286. We're like, what is that? I don't know, like 30 some odd percent or something like that down from the highs. So like we've already had a pretty big sell off. So the odds of that thing continuing down dramatically is relatively low, but that still is usually a signal that the trend is kind of reversed, right? But what we had here, we had basically a confirmation because it popped back over, kind of bounced off that level again, and then we really broke, and then it really started to sell. So this is the point here, and you can see it. Like if you look at these volume candles, like look at the size of these volume candles, right? Because that 280, what did we say it was? I'll draw that in so everybody can see it. So that 288 line, so that was our open price for the day. So that's your red green line, right? So you can see that here, right? Like we in the morning, we kind of wicked below it and bounced back up pretty quick. And then later on in the day, it dropped below, and then it kind of clung to it for a minute. And then when it started to come down, it just waterfalls off, and you get these two massive volume candles. So this is everybody long bailing, and this is everybody short, just like hammering into this thing. Because again, we're up what, 500, 600, 700% from the lows. And if you look at the daily chart, everybody knows that this thing always sells back to, pennies on the dollar. But what happened next is it just you get these kind of slow, painful grinds. And anytime you see something like this is always like a short killer, like when you get these grinds, because if you had like a big bounce back up, you could re-enter short and then it would snap back down. But when you get these slow grinds, it gives people time to change their position. It gives people time that are long to slowly sell and think about it. It gives people that are short time to slowly cover, and it just kind of becomes like this painful grind all the way along. We get that basically right into the end of the day, right? So we keep moving along. And then towards the end of the day, we had another signal here. So check this out. As we get this big grind all the way back up, there's another one of these massive candles, right? Tries to wick up again, and we get this huge stuff down on, almost 5.5 million shares traded in 1 minute. So in this day, we had a signal here that was basically the death blow. We had another signal down here where it broke below the red green, and then it kind of tried to reclaim, and then right into the end of the day, we had another big death blow right here. So we basically have three signals on this day that the thing is trying to die, right? So it's you got to be careful, because if it's trying to die and it's not dying, like what's that telling you, right? And then again over here, check this out. So it smacks it down, and then you get this again, this slow, painful grind all the way back up. And then what happens again? Look at this candle. We have another 7 million shares traded in a minute, another massive smack back down, and then it starts grinding again. So like this is just like, if you're shorting this, it's just driving you nuts, because you keep seeing these signals, and then you're probably not quick enough to get in. So you short it down here, expecting it to have this little bounce and go further, kind of like what we had over here, right? But then it just keeps not doing it. It grinds back up, and then it smacks down again. So you're thinking, okay, great, like get in a little bit more. Now it's going to be the death candle. Now it's going to be and it just never comes. So if you look into the next, sorry.
Sorry. It reminds me of like those bad horror movies where the zombie, you keep chopping them up and it keeps coming at you.
Yeah, it's like Michael Myers, how he can like outwalk a car.
Yeah. Yeah.
Mhm.
I wonder though, because it's so consistent, like the slams and the price buying up. I'm wondering if like some market maker or whale is putting like a buy wall there, forcing people's bids up just to slowly bid it up, and then only to slam back down on them.
Yeah, there's that, like anytime you get something like this, there's definitely some kind of manipulation going on. And like again, like if you look at the daily history, like you just take one look at that and the stock's manipulated, right? Like they get the pumpers, they run the thing up, they sell their shares, they make their money, and it comes right back down, right? Like this is a company that's basically doing whatever it can to stay on the listed stocks. So you just have to keep that in the back of your mind all the time, right? So the next day, this is the day where we get the big blow off top, right? So it doesn't really die. This blue area here is after hours and pre-market, just for anyone that doesn't know. So we had this day where it kind of tried to die like 3 or 4 times, didn't, and then we opened the next day. So it looks like I think we closed here around like maybe 320 area or whatever it was. And then we had the next day, we opened red again. So we opened down, and then it kind of quickly reclaims, and then that's when you just get like, this is when you get the short squeeze, right? So this thing was 23 or 24% short float to begin with. And if you guys have been watching our videos, that my rule of thumb is that I really don't short anything that's over like even 15% short float. I don't love, unless I see like a really good setup, or if it's like on a really big daily time frame and I know the thing is like completely dead. And you have to give it more range too, because if it has a high short float, it'll squeeze further. So like if you have lines at, let's say it's at $3, like here, let's say it's at like, you're looking off this high a day here at this 350 area, something like that, like from after hours, to try and short into that. Like it might push, if it was to hit that, it might push up to like 365, 370 before it turns around. Like you got to give it a lot more breathing room. And you also have to be aware that it can move a lot faster, because like think about a stock that just tanks, right? Like as it hits shorts, or it hits longs stop orders. It's the same thing in reverse, right? Like if you have a really high short float, there's a lot of stop orders above it. So like if the stock gets pushed up into those stop orders, it just like floods the market with buy orders, and then the stock's going to rip up really quick. So you got to keep that in mind. But like, so this is what we had, right? Again, you have this slow, painful grind all day, and then there's the big fuck you candle. So we were up at 485, and then literally in the blink of an eye, we're down at 430. Halts, opens at 404, and then wicks down to 382, up to 430. So like this is kind of another, again, this is your signal. But if you look on the daily, like now we've had this huge run up finally, where the thing really just kicks itself down. So I think we had like 3 or 4 halts in this. It doesn't show on DOS, but like this came down, it halted, and then we had these wicks here, and then it comes down again. I think it halted right there again, opened down here, and then we wicked all the way down to the bottom, came up, and then it just kind of, like, this is kind of your death signal, right? Like once you see this, like, because what you got to think too is like, look at the volume back here, like from basically everybody who's been buying this thing since like 11 o'clock this morning. All this volume, we're trading on average like 3 to 5 million shares a minute. Every single one of those that's a buy, within basically 1 minute, all those people are in the red. So you have
Looks
to
like
keep that.
it actually looks like a lot of orders got taken out. Like they got removed from being executed because that is a huge price movement considering how low the volume it is. So people just saw
Yeah.
it coming and said nope,
Yeah.
taking the orders out.
Yeah. Well, I was talking to a guy who messaged me on Instagram because he said he was trading this like during the day, and he said he had a stop order. I think he said his stop order was around here like 430s, like something like that. It was like right above this kind of topping line
Yeah.
here. So that's where he had a stop order, and he said it didn't get executed until like the 380s. So that's like just so you guys are aware of that as another side. When you do get these really overextended stocks, like you can think, oh, I'll just put a 20 cents trailing stop on the thing, and when it whips down, you just market execute and you're out. Well, that order should have been here, which was the 430s or whatever, and then it opened down here at 4, and then it didn't get executed until the 380s, right? So like it can just, because there's so many orders that are getting executed at the same time, it's just it's basically just goes in order. So if you weren't the first one to put that order there and there's nobody to fill you, it can go way down below, like below where your stop was, and then you're basically taking 5 times the loss you thought you were.
I was actually on the other side of that for a Bitcoin trade, like back in the spring.
Oh
Uh,
yeah.
Bitcoin sold off. It looked exactly like that. And I always have lowball orders set on exchanges, like stupid lowball orders.
Yeah.
And it freaking hit. Like it only filled like a third of it. But
Mm.
literally when Bitcoin sold off, there was nobody. Everybody removed all their orders. It went down like the actual spot price maybe went down 20%, but on this exchange it went down 60%. It hit my lowball
Oh,
order. I
oh
did
my
3x on that
god.
trade.
Wow. Yeah, that's lucky when you get in those.
Yeah, seriously. That's why I just put random lowball orders on exchanges. You never
Yeah,
know.
just in case. Yeah. Just see if it grabs it.
Yeah.
Yeah, yeah. So that was pretty much the signal on this one, guys. And then another thing that if you guys like, if anybody is kind of trading this like in the middle of the day and they want to watch for a potential like buy opportunity on these things, SSR, which is short sell restriction, so that gets put in as soon as the stock drops 10% or more on a day from the previous close. So in this case, we were, what was it? I think 320. 322 or 323, something like that, I think was yesterday's close. So if you did want to buy this, because like, I don't know, some people don't short or whatever, SSR is a pretty good level to buy off of, because usually what they'll try and do is they'll try and trigger SSR, and then that way shorts can't just smack the bid and short the thing down. They have to short it into a bounce, which kind of, I don't want to say it like reduces the short pressure, but it just makes it harder for shorts to get in, because you have to wait. Like longs are the only ones that can sell on the bid. So if longs stop selling, then it's just shorts that have to wait for a bounce to get in. You can't just hammer the thing down. So anybody that doesn't know how to find where SSR is, you literally just take yesterday's close price and times it by 0.9, and that'll give you the price for today. So if you take, I think it was like 324 or something, times 0.9, so you're like 290, 291. And then if we look at our lows here, look at the first dip we had here. The low on that candle was 292. The low on this candle was 289. So it came within basically 2 cents. It literally just turned it on, and then we had from the low at 290 all the way up to 360. So you had a 70-cent bounce in a matter of 10 minutes, 15 minutes. So that would be, if you are trying to long that would be the place to do it. Here is just really, really risky in my opinion. But yeah, that was pretty much it. And then it kind of, the thing was though, like if with these kind of things, again, like going back to the whole Reddit and Discord groups, chats and stuff like that, like usually when you see a signal like this, and if you look at the daily history of this stock, once that happens, it usually gaps down and you just get a big solid red day and the thing just dies really quick. But the chatter that everybody was saying was, oh, it's same, it's just like paper hands, people selling, like this, that, and the other thing, right? Like everybody's just panicking out, like, hold high a day, all that crap. And so, get these people that are still kind of trying to buy into this thing. So they push it up again, but the next day it kind of goes up a little bit and then it just sells all day. And then it kind of starts to just carry that trend all the way down and, just keep selling. So it's selling slower, but the pattern still remains the same, is that once you kind of get this signal, it's over. And another thing to keep in mind, guys, like this 458 lineup here, that was the other one that we drew in on the daily chart from way back when, right? So That was the one from, let's see here. Let's zoom in a bit. Yeah, so that was a daily chart line that we drew back from October of 2019. So it basically just pushed through that by like about 20 cents. And then once that broke, it came straight back down, right? So that's kind of why these daily levels are really important. Like, literally years later, they still wait. So those are just kind of the key levels that you want to play off. But then, as you can see here, there's your big daily candle. Like it opened, you had this big run up, almost 1 billion shares. And then now we're just kind of getting the fade back down. So like we're backside of the move now. And like what this thing, it'll have another bounce for sure. Like it might kind of come down to like this 230 line area, bounce back up to $4 and then come down again. Like we don't know, but there will be another opportunity to get in this short. And if you're newer, excuse me, that's the opportunity you want to look for. Like if you're kind of learning, I would say don't bother with any of this stuff. Like let the thing die. And then once you get that secondary bounce, enter on that. And that's what I'm waiting for myself. Like I'm still not playing this thing. I haven't touched it. But if I see a good secondary bounce on the daily, I'll probably just have some orders floating around here, depending how far down it comes. Because again, you look at the history, literally every single time the stock has spiked in the last 10 years, it's sold all the way back down to where it started. So, I mean, that pretty much says it all on that one.
Funny, I years of looking at large caps, I've never seen a chart like this before, but but it looks very familiar to those who are in crypto. This is a very
Oh yeah,
familiar. Yeah, this could be like any token, you name it. This is their chart.
yeah, yeah. So that's pretty much it, guys. I mean, like, I hope that was relatively simple. I mean, like I said, as soon as the thing starts running, what do? You zoom way out, draw your daily lines in on any of the big days that have a lot of volume, and then you combine that with the shorter time frames and work off those levels. If it rips through your level, you get out. If it doesn't, you add, and you just kind of carry it on. But at the end of the day, like we know that this thing is going to sell. Like we know that it's going to sell. So it's just a matter of waiting for the moment, waiting for it to turn, and then once it turns, you can get in and comfortably set a risk that if it breaks, that it's going to go higher. If it doesn't break, you can basically just hang on, let this thing fade for days and days and days. So
No, you posted something, I think it was Thursday or Friday. It was about how many charts you saved or you looked through during the day to like learn your patterns and stuff.
and you call me a nerd.
It's some nerdy shit. I gotta respect that. But
Yeah.
no, I was gonna say like let's say somebody wants to play this, and whether or not it goes their way, what are kind of the things that they want to jot down just so they can learn from it?
So basically, you just want to like it's really just the patterns and stuff, right? Like I can't really give you like a look for this and then write it down kind of thing. Like I think I posted like earlier this week. I had 978 charts that I'd screenshotted and saved from this year alone. So I probably have like 4,000 or 5,000 that I've saved over the past like few years since I've been trading. But I have over a dozen spreadsheets. I have close to 1,000 screenshots of charts that I've saved from this year, and every single one of those screenshots has like a full paragraph of written notes on it. Like, again, I always say I'm doing this like 2 hours every night and on the weekends. This is why. But like I can collect all my data. So you just narrow it in, right? So you look at something like this and whatever your indicators are. So, you might zoom into this and say, okay, like I'm gonna play this safe. So when I see a chart like this where you have this day where you get this really big top wick and then the stock comes down, and then I have a daily here, by the way, this, check this out. So 409 daily line, that's almost exactly where this stock opened on that rebound. And where did we get that line from? That was back in 2019, right? So like it's not magic, guys. Like it's literally just playing off the levels. So that's what you might do, right? Like you say, okay, you get this big daily wick, and then you know that the next day it's going to open, it's going to have a little bit of a push, and then if it gets below your next daily line, you short it below this level and then just let it fade, and then you cover into the next line, and then you can hit the next bounce and then cover into the next line, and just keep working your way through that. So like it's just a matter of like when I save charts, like I save any chart that moves. So anytime a stock moves on the day a lot, like enough that there's range to play, I'll save it. And then on the weekends, I'll kind of categorize them. So like I'll have, I might have saved 15, 20 charts during the week. And then I'll have, another like 30 or 40 different folders. And then I'll put them into whatever folder they're associated with. Some of them might be completely irrelevant. Some of them might just not really be that great. So I'll just delete them. And then you kind of narrow it down. And then over time, like I'll look at some of my things and I'll say, okay, I got 40 folders. Like I have 6 stocks in this folder. I have 10 charts in this folder. I have 400 charts in this folder. I have 80 charts in this folder. And I'm like, okay, I'm going to focus on the one that has 400 charts in it because that's obviously the most common pattern. So that's the most frequent one that I can make money on. And then I'll set up my spreadsheets and narrow it down from there. And then you just kind of keep, and then you go down that rabbit hole until that one chunk of stocks is basically like set up into a really refined system that you can play well.
So, but I mean, like specifically, what kind of? I guess you just said like you wrote a paragraph for this stuff. Like, what kind of things were you like? What are important that you pick out?
Just like whatever kind of seems interesting. Like, all right, stock spiked up into prior days close level, like prior days high volume close level. It sold down to pre-market lows. Just kind of like whatever makes sense, or like rough volume. Like if it's a bit of an outlier, like if it has like a market cap, like a certain type of market cap or a certain short flow, like I'll write that kind of stuff on there. It's basically just my thoughts. Like it's not anything specific. I'm just looking at the chart and I'm just kind of like I'm like thinking in my head like what I'm seeing, and I'm just typing it as I read it, so that when I go back and look at it on the weekends, I can just be like, oh, okay, yeah, that I remember that. Like I remember, it's just bullet points of just whatever I'm thinking of at the time when I look at it. Because if I look at it, 6 months later, I'm not going to remember what I was thinking. Like, I'm not going to remember that, oil stocks were running that day and Discord was talking about this one. Like, I'm not going to remember that, right? So I'll just write that stuff on the chart so I know.
Okay. Yeah, that's what I was thinking of because I'm like you're obviously like a insightful kind of guy, so you probably know what to write lists down. But let's just say you have somebody that's totally new to this thing; they may not even know what would be an important thing to
Mm,
write down. Like if we see a chart, we'd be like, okay, that's something significant. That price action there was a rejection, or it did something surprising, so we'll know to write it down. But if you're coming at this like blank slate,
yeah.
um, just what do you do? Just look at I guess you play something with the expectation of a certain price action. So then if it obviously doesn't do that, you'll write that down and be like, okay, well, it
Yeah.
didn't do what I expected, and then I guess try to figure out why and why not.
Yeah, like the main thing is to find your levels, right? So like if you're looking at a chart and the thing sold off to a certain level and then it bounced up 40%, then like the first thing I would do is say, okay, how do I find that level? Like what showed me that that was a level? So I might throw in pivot points, I might throw in Fibonacci, I might look back and see if there's a daily level. Like basically like the chart did what it did. Now, how do I determine why that was like why did it go up to here and turn around, why did it dip to here and turn around? That's what I want to find. Like I want to find, and then you try and look for commonalities. So like if you're going long or something and you're doing dip buys, it's like, okay, the stock gapped up and then out of the morning or whatever, it dipped down to here and then it spiked up. Or like on a daily chart, like the stock ran up for 3 days and then on the fourth day, it sold off for 2 days and it bottomed here and then it had another 20% bounce. How do I find that bottom? Like what told me that that was a bottom? Was it an indicator? Was it a daily line? Was it a volume indication? Was it a press release? Like what caused that to be a level? And that's my main focus for anything, is trying to find out why that was a level, and what information makes levels more strong than other levels. So like if I know that if it has a daily level, if it has a pivot point, if it has X amount of volume, if it has all three of those things, then I know from my charting that has a 95% chance of bouncing. Whereas if it has two of those things, maybe it only has a 70% chance of bouncing. If it has one of those things, it only has a 40% chance of bouncing. And then I'll buy or I'll short a certain amount of shares based on that percentages, right? So you go bigger on the ones that have all of your criteria, and you go smaller on the ones that have less odds.
Yeah, that's a good point. I remember I spent a long time trying to figure out what indicators seem to hold more weight and which ones have less. Like, I don't know how you concluded about the price action, but for me, it's pretty obvious that like um, resistance and support on higher time frames hold a lot more weight hourly or the minutes or whatever it is. Like if it's
Yeah.
a daily close, a weekly close, a monthly close, those are solid.
Yeah. 100%. We just showed that on CEI, right? Like it hit, like it did something around every single daily line that we drew. So, but
Fun.
yeah, I think
I got
we probably wrap it up there. I guess
yep.
we're at 11:34. We're 4 minutes over.
Yeah. Cool. Awesome. All right. Thanks for watching, guys. And yeah, next episode we're gonna do investing, and then yeah, we're gonna see we keep going this shorter um format.
Awesome. Yeah, let us know what you guys think.